When someone passes away in New Jersey, it's very typical that 50% of funds held in banks and investment accounts are frozen until a New Jersey tax waiver is issued. In this video, I'm going to show you the 3 most common ways to get a New Jersey Inheritance Tax Waiver to release funds from bank accounts, investment accounts, and proceeds from real estate owned by the estate. Hi, I'm Bill Dooner. Glad to meet you guys. Let's get started. In tax world, everything revolves around forms. To get a tax waiver to release funds, 90% of the time you will need to file one or more of these 3 forms. Form IT, Inheritance Tax Resident Return, covers all assets and is used to release funds from bank accounts, investment brokerage accounts, and real estate. Form L8 is used to release bank accounts and investment brokerage accounts such as TD Bank, Fidelity, Schwab, etc. Form L9 is used to obtain a real estate tax waiver to release funds from the sale of real estate. Form L8 and L9 may only be used by Class A beneficiaries. Let me bring you up to speed. New Jersey divides beneficiaries into 4 classes: Class A, Class C, Class D, and Class E. In case you're wondering, Class B was eliminated. Class A is special. They are individuals exempt from the inheritance tax. Here's a list of Class A beneficiaries: surviving wife or husband, surviving partners, civil or domestic, children, stepchildren, adopted children, grandchildren, parents, and grandparents. Since they do not owe any tax, only Class A can use Form L8 and Form L9. All others, meaning Class C, Class D, and Class E, must use Form ITR. This form can be complex and is frequently audited by the New Jersey Division of Taxation. Let's talk about who is Class C, Class D, and Class E and how much tax would be owed. Class C beneficiaries are basically brothers and sisters or sons and daughter-in-laws of the decedent. Class C beneficiaries are taxed if they receive over $25,000. The first $25,000 is tax-free. Everything above $25,000 is taxed at 11% up to a maximum of 16%. Now let's talk about who is Class D and how much is taxed. Class D beneficiaries are all other individuals such as nieces, nephews, significant others, cousins, friends, and any other individuals. They are taxed if they receive $500 or more. The tax rate for Class D is 15% up to a maximum of 16%. Now let's talk about who is Class E. Class E is exempt, no taxes due. Class E are nonprofits and are exempt from tax. Examples of Class E are hospitals, churches, universities, local schools, etc. Although Class E is exempt, Form ITR must be filed to get waivers to release the funds. Let's recap. Class A and Class E, no tax due. Class C and Class D are subject to New Jersey inheritance tax. Now let's go over some examples of the forms and how much may be due in taxes. Let's say a widow passes away and the widow has a house worth $600,000 and bank accounts and investment accounts worth $450,000. The gross estate is $1,050,000. At time of death, she has unpaid debts, funeral, etc. of $25,000. The net estate subject to tax is $1,025,000. Remember, the amount subject to inheritance tax is the taxable estate after debts like mortgages, car loans, etc., and they are deducted from the gross estate. I'm going to use the same fact pattern and apply it to each of the 4 classes: Class A, Class C, Class D, and Class E. Let's start with Class A. Let's say the widow passes away and leaves everything to her children: a house worth $600,000 and bank accounts and investment accounts worth $450,000. All Class A, no taxes due. No taxes due, however, the executor goes to, say, TD Bank or Merrill Lynch to transfer funds, and the bank says 50% of the funds are frozen until they get a waiver. The executor is allowed to file Form L8 directly with the bank together with documentation, and the bank will release the funds if the beneficiaries receiving the funds are all Class A. Next example for Class A is Form L9, Real Estate Tax Waiver. Same fact pattern. Widow passes away and leaves a house in New Jersey to her children. All Class A, no tax is due. Form L9 is filed directly with the New Jersey Division of Taxation, and if it is correctly prepared, The waiver will be issued in about 2 to 3 months. You will need a realty tax waiver to clear title if you plan to sell or refinance the realty. Now let's talk about getting waivers and how much is due when the beneficiaries are Class C, Class D, or Class E. For Class C, D, and E, the estate must file Form ITR. They cannot file Form L8 or Form L9 to obtain waivers. Remember, if taxes are owed, you usually can't get the waivers until the underlying tax is paid to the state of New Jersey. Let's use some examples to break this down. Class C example, same fact pattern, widow passes away, she has no children and leaves everything to her sister. The estate is allowed deductions for mortgages, car loans, etc. in the amount of $25,000, leaving a net estate of $1,025,000. She leaves the entire estate to her sister, Class C beneficiary. Here's how the tax is calculated. Sister Class C gets the net estate of $1,025,000. The first $25,000, no tax due. Balance of $1 million is taxed at the 11% rate or $110,000. Next example for Class D. Same fact pattern as the previous example. Widow passes away, but in this example leaves everything to her niece, Class D beneficiary. The net estate subject to tax is $1,025,000. The first $700,000 is taxed at 15% or $105,000. The next $325,000 is taxed at 16% or $52,000. Total tax due to get the waivers is $157,000. The executor must file Form ITR to get the waivers. Next example is Class E. Widow passes away, has no relatives, leaves everything to her church. If the estate is leaving assets to Class E nonprofits like churches, etc., even if no tax is due, you are still required to file Form ITR to obtain tax waivers. I want to pause for a moment to point out an important issue for executors, administrators, and beneficiaries of the estate. All these forms must be signed and notarized by the executor. Under New Jersey law, executors and administrators are personally liable to the state of New Jersey for unpaid tax if they distribute assets without fully paying the inheritance tax. It's very important that beneficiaries and executors do not rely on videos for professional tax advice. I highly recommend that you engage an attorney or tax accountant that specializes in these filings. The estate is allowed to deduct fees paid to prepare the tax forms. Whether you hire our firm or someone else, you should get professional representation. By the way, these forms are routinely audited by the New Jersey Inheritance Tax Section. The smart move is to engage a professional, especially for Form ITR. Thanks for your time. If you are the executor of a New Jersey estate, contact us for a consultation to discuss any tax questions. I will leave a link in the description to our website.